It's the Real Estate Podcast, brought to you by Ray White, the largest real estate and property group in Australasia.
And welcome to another episode of the Real Estate Podcast. We're talking to Julia Hartman from Bantax. Julia is a registered tax agent and chartered accountant. And welcome to the Real Estate Podcast, Julia.
Thank you, Craig. It's great to be here.
So we're going to talk about the new laws that prevent rental property investors claiming expenses relating to vacant land, even when they are building a house on it to rent it out. And Julia is going to be our new best friend here, breaking this all down for us to understand and explaining it to you and I on how this applies.
Yes, well, it starts from the 1st of July 2019 that you can't claim the interest on vacant land until you've actually got a house on it completed and available for rent. So this is going to affect the 2020 and the 2021 tax returns so far. It's directly aimed at mum and dad investors, even if they work through a trust or a super fund. The only entities that aren't caught up in this are companies, and you wouldn't want to own an investment property in a company anyway because they don't get the 50% CGT discount, or public entities, so that's your big managed funds and the like. Otherwise, no interest until the dwelling is available for rent. Now, this could also affect people who have vacant land because their house burnt down, not uncommon at the moment down on the south coast where there's rental properties sitting there with vacant land. There is a carve out in that they get 3 years from the natural disaster to get it back up. They can claim the interest for 3 years.
It might be more attractive for people to buy established properties rather than go down the whole building option.
Yeah, well, for a lot of reasons too, because of all the time and the delays these days. But you've got to wonder what the government was thinking if they want to stimulate the building industry, and yet they bring this in to discourage investors from building new houses. Now, this lost interest, of course, is added to the cost base for one day when you sell, but no refund check to get you through those first 12 months when you're trying to get it built. And you've really got to lock in, try and get that builder to get on with it. You don't really want to make a commitment to the expense of paying the loan by buying the property until you're locked in that builder is going to start work on it. There is a bit of light at the end of the tunnel, but in that you can get your interest on your construction costs, or at least that's what the ATO is saying in new draft ruling they just brought out, TR 2021/D5. It's only a draft, but they say that this new law only applies to the costs associated with holding land. So if you're building a house to use as a rental, then the interest on the borrowings to make the progress payments would be deductible. And as soon as you get it to lock-up stage and you list it with a real estate, then the interest on the land would also become deductible going forward from that point. So nevertheless, it's a big incentive to buy an established property, as you say, Craig.
So if this ruling has recently come out, a couple of points to pick up with you here, Julia. The first point is it fair to say that some property investors may have missed out on claiming the interest on the construction cost in their 2020 and 2021 tax returns? And to my second point, considering that this is a draft, should people go back and amend their tax returns?
Yeah, I think they should go back and amend their tax returns because the catch is you've only got 2 years to amend. And when you look at it, it's from the notice of assessment that you receive, but you look at that 2020 tax return, it's getting up to that 2 years. And these rulings can take years to finalise in some cases. If you don't amend now, you may lose the opportunity to ever be able to go back and amend that. It's a two-way street too, that the ATO have only got 2 years to come back and whack you for it. So you may as well have the bird in the hand, have your refund, because you're following a draft ruling. They can't go and penalise you or fine you. They can only charge you the tax if they change their mind and charge you a little bit of interest. So if this draft ruling was against taxpayers, the ATO would have no hesitation in saying you should have followed the draft while the draft existed not waited until the final ruling. So we're quite entitled to do it the other way around because this is in our favour. Now, some people, there might be a lot of tax involved and that sort of stuff, so they might think, is it worth the trouble? Well, I don't think the final ruling will change. Neither does the author of the draft ruling. You see, normally it changes because the profession has said this isn't very fair. We want you to change it this way. The profession isn't going to argue about this being in the taxpayer's favour. Mind you, it caught us all by surprise.
And I wonder just how many of your clients are super confused about all of this, Julia.
I would like to think they're not confused because we have sent out a good blog to them explaining it in detail. But I guess if you narrow it down, you say, have I incurred interest in that financial year on costs, borrowings that have been for the building, construction of a property I'm going to use as a rental property? If that's the case, then it's worth looking into. Then if you go to that blog, you will see how we talk about, well, if it's mixed in with the loan for the land, you've got to apportion it. But it's not that hard, really, for what you get back, because I imagine, that's quite a few $1,000s in interest for depending on where you are in the stage of the construction. So if you've had interest on construction borrowing since the 1st of July 2019, heads up, it's worth reading the blog.
Hey, Julia, thank you for explaining that and breaking that all down for us today. Great to chat, and thank you for coming on to the Real Estate Podcast.
You're welcome. Thank you so much, Craig. That was good.
We connect you to the best real estate information across Australia. The Real Estate Podcast.